So the single audit is a requirement of federal agency funding that became popular in the mid 1980s to help audit the federal funds. And this is when federal agencies supply funds to government and nonprofit entities. So it used to be that they were required to do audits on organization-wide basis rather than a grant by grant basis, which is a single audit. So then the Single Audit Act was passed to facilitate audits of individual grants and things. So grants need to be reviewed to be determined, are they subject to a single audit, yes or no. So we have the documentation that is available is that Office of Management and Budget, or OMB, under Uniform Administrative Requirements, Cost Principles, and Audit Requirements for Federal Awards. So this is specifically looking at federal dollars given to state and local governments and nonprofits. So the purpose of the Single Audit Act was to establish those uniform requirements and to improve the information that was being collected about federal financial assistance programs. When defining, there are different thresholds that you have to meet in order to determine if you need to have a single audit. So this is a decision tree that talks about, are you a state or local government or not-for-profit organization? So then yes, you go to, did you receive more than $750,000 in federal awards during the year? If that answer is no, then you are not required to have a single audit. If yes, then, and it was only one program or program cluster, then no, you don't have to. You can do either a single audit or program specific audit. So you can choose. But if yes, you received more than $750,000 and it was expended from only one program or program cluster, then yes, you must perform a single audit. Okay. For single audit requirements, then we have to do an annual audit gets performed on the non-federal entities' financial statements and schedule of expenditures of federal awards. So what this looks at is, if I'm a city government and I received money from a federal entity, then my entity is going to be audited and that federal award is going to be looked at. So how I spent that federal award, mostly to make sure that I am in compliance with the requirements of that federal award. Of course, the audit has to be conducted in accordance with generally accepted government auditing standards. Okay. The opinion gets made by the auditor, much like a regular audit, where we look for, did we comply? Are our financial statements presented fairly or not? And for each major program, the auditor has to test internal controls and assess the risk of those internal controls. Okay. A compliance audit, this is when we are asked to express an opinion that we complied with laws, regulations, and the grant or contract provisions. So what this is looking at is, like I said, when we receive federal grants or federal money, they usually come with very specific rules about how and what that money can be spent on. This compliance audit looks at the expenditures and says, yes, we did or didn't comply with the laws, regulations, and provisions that were specific to that grant. We would, of course, have to report back to the federal agency, which then they would do a program evaluation to see how successful the program was. Okay, the things that we have to do when we're looking at, we have to look at all of the federal awards that we received and expended, and the federal programs under which they were received. So did we get it from the Department of Education or the Department of Transportation or the Department of Agriculture? Okay, we want to maintain appropriate internal controls and set up a system to make sure that we're following all of those rules. Now, this may seem very easy, but it can get very complicated, because when I say every single federal grant comes with its own rules, that doesn't mean that all federal grants have the same rules. Normally, they all have very unique rules. And if you're receiving multiple federal funding, you have to make sure that you're following compliance for every single fund. The accounting for them generally has to be kept separate also, to know that you're not mixing money or using money separately. This is also true for nonprofit entities and educational entities, whether they're set up as governments or as nonprofits or private entities. Okay. And then you have to prepare the appropriate financial statements and ensure that your audits are properly performed and submitted when due. If anything adverse would be found during an audit, you would need to take corrective action and immediately follow up on that. So when you're trying to decide which programs you should select for audit, so first you're going to look at what's the size. How much money did I get? Because remember, $750,000 is the threshold. So first, did you receive more than $750,000? Okay. And then you need to decide, is it a type A or a type B? Okay. And looking at the type A are the higher risk. So type A criteria are the larger programs. Okay. So we see larger of 750,000 or 3% of total federal awards expended. So if you had $300 or $3 million in awards, is one of the awards more than 3% of that, then that becomes a type A program. Okay. Then we look at what is low risk and what is high risk. So a low risk type A program would be programs that had been previously audited with no internal control, deficiencies, or any issues. So then the auditor's professional judgment, they're considered low risk because previous audits have shown that you are following compliance laws. In step 3, then, we're going to identify type B programs that are considered high risk. Okay, so then when we're looking at risk assessments, we would determine, do any of those type B programs need that single audit? And then we're going to audit all type A programs not identified as low risk, and all high risk type B programs totaling at least 1/4 the number of low risk type A programs. And we're going to do an example in the example video of how specifically to identify. We're going to look at some government grants, and we're going to identify if they're high risk, low risk, A and B, so you see an example of that being done. Okay. Looking at then that size thing, so the percentage of the cover rule means that we audit based on size, making sure that the larger programs are being audited and getting covered. When we create a report for our single audit, we would have the financial statements and the expenditures. So how was money being spent? Any prior audit findings, if there were prior audit findings. Sometimes grants are short term and they only get audited once. Sometimes grants are longer term and they would get audited more than once. If what the auditor's opinion was, and if there was any corrective action needed. These single audits must be submitted to the audit clearinghouse designated by the OMB within the earlier of 30 days after receipt of the audit reports, or 9 months after the end of the audit period. So it's up to the person receiving the money to make sure that they are reporting in a timely manner. Okay, the things that are required in that audit's report would be the opinion as to whether the financial statements are presented fairly in accordance to GAAP, a report on internal control over financial reporting, and the compliance of the particular federal award that they have received, and a schedule of findings, and if there are any questioned costs. Now, when we get a question cost, these are costs that are not supported by adequate documentation. There's a question about whether or not that cost should be allowed under this particular grant. So those things would be disclosed in the auditor's report. Okay. Then, of course, we should have those question costs, generally based on like material non-compliance that would affect the financial statements. Okay. Then a deficiency would be a material weakness in internal control. And a significant deficiency is less severe than a material weakness, but something that needs to be brought to the management's attention. Okay. Single audit has been an area of concern for a very long time. It's something that gets reviewed continuously about what is the quality of these audits. Now, this is actually true for all auditing. So all audit quality is under review. There was an article recently actually about the Big Four, where they had gone through and reviewed the Big Four audits over the last few years, and they had found that many of them had missed fraud or material misstatements that needed to be brought to attention and had not been brought to attention. So the statistics given in the textbook about audit quality for governmental accounting is actually just an audit quality issue in general that the entire accounting industry has been looking at over the last couple of years about how do we address the situations in audit quality and improve them for the future. Okay. When looking for an external auditor, governments and nonprofits should submit a formal request for proposal. So they put an RFP out. They say that they're looking for someone to do an audit. They explain exactly what kind of audit, whether it's a financial audit, a single audit, a performance evaluation, an engagement audit, which standards they're following, if they're following generally accepted auditing standards, generally accepted government auditing standards, or different state mandated standards, especially in the case of nonprofits. Many nonprofits follow state mandated rules that are different from state to state. Okay, SOX is not, so the Sarbanes-Oxley Act is the last thing the text talks about. And it mainly just talks about how, well, the SOX Act does not directly apply to governments and nonprofits. There has been an indirect impact on governments and nonprofits, such as the adoption of internal controls and the need to have those internal control measures in place. Okay, and that is chapter 11, which just is a very broad overview of auditing of governmental and nonprofit entities.